My name is Ntaweleng Lechela and welcome to the special broadcast of the Budget 2025. We're just under 30 minutes away from Finance Minister Enoch Godongwana delivering his first budget under the Government of National Unity. The budget comes amid slow economic growth, high unemployment and global trade tensions. For many South Africans, we have a distinguished panel joining us today. I'm pleased to welcome Razia Khan, Managing Director and Chief Economist for Africa and the Middle East at Standard Chartered, as well as Nthabiseng Moleko, who's a development economist at the Stellenbosch Business School. Thank you so much for joining us, ladies. So let's get right into it, right? It is the first budget under the new administration. I'll start off with you, Nthabiseng. Just walk me through your expectations under this backdrop. As you know, we also have, the squabbles between those parties also taking place.
Thank you so much for having me in a very, very good afternoon. I think I'm hopeful. I think the reality is we are in a different context, as you have outlined, from a trade perspective. But I think there is generally a recovery of global growth. I think that the issue in South Africa is really how are we going to finance the growth of our economy and how are we going to finance the expenditure with the mediocre growth that we have experienced currently. The collections from the Revenue Authority will be the determinant of the size and the scale of the deficit that we are likely to have. And I think the second issue is the strategy around how, if the collections are not aligned to what we expected in the current financial year, what therefore will National Treasury do and put in place, whether it's tax hikes, which we are not expecting, but really on the side of debt management, incremental debt, as you know, currently a fifth of our interest expenditure is currently exceedingly high, with about a fifth of our current collections going to servicing debt payments. So it's quite expensive to continue to increase that debt burden. And we know that this money could be used efficiently for service delivery and other economic infrastructure programs. So the question is really, if the money is not coming in from the collections, how do we grow our economy? What are the metrics and the necessary instruments to advance economic growth that is inclusive and will deal with the issues of underdevelopment and also unemployment? And
we'll get into those issues around revenue collection in just a bit. Razia, Nthabiseng touching on some of the important issues there. Yes, we do know that sentiment has improved, with many investors dubbing the Government of National Unity as business friendly, but that's still not filtering through to growth just yet. With that being said, outside looking in, what are you expecting to hear from Finance Minister Godongwana?
Now, this is a really interesting budget in many respects. Not only the first budget of the Government of National Unity, but only a week ago, the narrative in terms of what analysts were saying and their expectations was almost entirely different. The weakness of growth to date is well recognized. There was concern that this could mean a revenue miss, even relative to those pretty downbeat projections that we'd had at the time of the medium-term budget policy statement in October. And everyone was saying, well, how is Treasury going to compensate for that? Fast forward just a few days, and it seems as though there's a lot of talk about potential revenue measures, almost too much talk for it to be a coincidence. Talk even the suggestion that there could be as much as a 2 percentage point VAT hike, which would be a very bold way for Treasury to make the statement that it is very serious about containing that future debt path for the benefit of the South African economy. What we had in the State of the Nation address was the outlining of a reformist agenda, the dismantling of some of those poorly performing state monopolies, opening the way for private sector investment, the focus very much on an acceleration of growth. And of course, none of this is possible in the context of an economy where investors are looking at the situation and saying, but the debt levels are problematic and the growth still isn't there to be able to reassure on those debt levels. So I think it's going to be a very interesting afternoon overall, given all the chatter that has suddenly surfaced in the media around potential revenue measures that could be very, very much path altering for South Africa.
Frank joins us now. Frank Blackmore from KPMG. As we've heard there from Razia, slow economic growth. We are also seeing downbeat revenue collection. Under this backdrop, a really tough balancing act, I guess, for the minister.
Indeed. I think especially if he wants to keep his word with respect to fiscal consolidation. We know about the added requests for funding. Transnet's put one through, SDR grants, the continuation of those as well as the growth of those, transformation fund, let alone problems such as municipal debts to big utilities, Eskom and water boards, etc. Plus intervening where we've lost some funding in terms of potentially the USAID, etc. So there are a lot of these additional requests for expenditure, while we have the moderate growth on the revenue side, even though that at last time I looked was in line with expectations. So unlike last year, we don't understand that we have a massive deficit which we need to fill, but it's still a very difficult juggling act for the minister, since he'll have to shift funding from current expenditure areas in order to cover. How many of these, I'm not quite sure. That's for him to let us know at 2 o'clock.
And let's get into, that revenue line. There are expectations that we will miss projections come 2 o'clock. We'll hear about that later. But there are also murmurs within the media, as Razia has mentioned, that there could be an increase in perhaps VAT. SARS Commissioner Edward Kieswetter has advised against raising taxes, raising VAT. Ntabiseng, what are your thoughts around that, particularly around VAT, considering that the consumer, that the ordinary South African is still under a lot of pressure?
So I think the reality is that National Treasury is looking at household consumption. And I think the issue of cost of living is a serious crisis. We know that the fuel prices, the supply increase, the hikes in cost of inputs for manufacturers, particularly who are using a lot of imported goods. And on the supply side, this feeds through directly to the consumer. I think South Africans are hard spent. We also know that the tax base is from a small portion of the population. This is from, both PAYE in terms of the fiscus collection of the revenue, of the income allocation, but also on the corporate income tax side, we know it's big corporates that are the majority of the recipients and paying into SARS. So they are really constrained. You're hitting the same people, with higher rates and a very small base. So you have to have a very careful balancing act to not disincentivize, investment. I think there was a sweetener, though, 2 years ago. The Minister of Finance did have a drop in the corporate tax for corporate. So I think there was a bit of a sweetener there. I don't think we are expecting tax hikes. It would be very difficult to manage, except for what we call sin taxes. One can expect, the normal fuel levy and some of the tax on tobacco and also your gin and other type of alcoholic drinks. But I think beyond that, it would be very difficult to take more from a very moderately growing economy where you're seeing widening unemployment, less people have jobs. The tax base is not growing wider. I think the real issue here on the tax side is how do you grow so that output is increased so you can collect more from a wider base? I think how do you have more inclusive economic output expansion so that you can have more businesses actually giving into the pot, but also more South Africans giving into income tax? I think you also have to look at the issue of expenditure being used more efficiently and also reducing what we call wasteful expenditure from the provinces, from the local municipalities, and I think national government. Let's use the money we do collect better and more efficiently, and it must get to service delivery.
You touched on something important there around the issue of growth, and that the economy actually has to grow and expand so that more businesses and more individuals do contribute to the tax base. Frank, are you of the same opinion here around taxes, that we probably won't see hikes within personal income tax, hikes within corporate income tax, and possibly see hikes maybe when it comes to the fuel levy as well as sin taxes?
Yes, exactly. I think with the personal income taxes, I mean, even if you just take total taxes as a percent of GDP, South Africa is in line with countries, we're higher than the US in that respect. We're in line with Australia, with Switzerland, at around 28% of GDP. Of course, we don't get the same outcomes for that tax as these countries. So that means, we're paying sort of in the A league in which taxes are collected at that rate, but those taxes are not delivering either the growth or the upliftment of lives that we expect them to expect those taxes to do. And that is, the recommendation prior is because we're not growing much. We have this sort of narrow tax base. And so we need to get this economy growing. It's a necessary condition, as we say in economics, not a sufficient condition, but without growth, there will be no expansion of the economy. And therefore, I think growth must be a priority that we see more of the minister's speech addressing in this budget.
Let's just get your views around the tax base within the country.
Thank you. So a big picture view is that we know growth in South Africa has been weak for so long. And the narrative that we've had from policymakers is very much that there hasn't been the room for big tax increases. A further increase in PIT, well, that could be very damaging. It just makes South Africa look less attractive compared to other jurisdictions. There are question marks around whether you get any additional revenue if you do go down that route. Corporate income tax, there's going to be a lot of focus on establishing globally competitive conditions. Now would not be the best time. And that leaves VAT. If we think back to the last VAT hike, so much political capital was invested in just a 1 percentage point increase in the VAT rate in South Africa, the only increase that there had been in that rate since the end of apartheid. And it's widely acknowledged, if you look at South Africa's tax base, this is, unfortunately, it might be seen in some respects as a regressive tax, but it is one of those big revenue drivers. A rise in the VAT rate, which almost nobody was expecting just a week ago, but there's been so much media chatter around it just this morning. Is that coincidence? Is something coming through? What to make of all of this talk around emergency cabinet meetings around a potential VAT rate increase? Looking at this big picture, I've just returned from Saudi Arabia, an economy fairly resource dependent in the past, rolling out very rapid reforms. They introduced a 15% VAT rate during COVID. Now that's the same as South Africa's current VAT rate. Here in the UK where I live, a VAT rate of 20%. Sure, it will be unpopular, but is there any better time to introduce a meaningful tax increase that can really set the fiscal path of the country in another direction than right after an election? From that perspective, the timing of any VAT increase right now would be perhaps wise because it's so far out of the election cycle. But the more important point is there are very few levers available to the South African authorities to massively ramp up the amount of revenue collected. And given that there are spending needs, vast spending needs, if the country is to regain a meaningful growth trajectory, how else is it going to be financed?
Frank, let's just get your views around that. We talk about a possible increase in VAT, but as I mentioned with Ntabi saying, we do have a South African consumer, South African businesses that are really struggling under this landscape. What are your views around that?
I think, as Razia said, it is an easy tax to collect. It's broad-based. And it does the job. But like we know, there's been a lot of talk as well of its regressivity here. It's very anti-poor. And we know last time the 1% was tabled, the 1% increase, we had a lot of public opinion following that preceding that that proposal. So yes, it's one of the only things that we can do, but of course, that's on the assumption that one must always chase additional expenditures. And I think that's where the real problem lies in this budget for the minister. The expenditure guys are always a few steps ahead, and the revenue guys have to always catch up, especially in a very uncertain environment with low economic growth and a very thin sort of tax base. So I think that sort of changes the complexion, and these two sides can't be seen divorced from each other. We have to see them together, because in most countries, tax is also a kind of mechanism of the people in a country to keep government in its place regarding expenditures. This doesn't happen in South Africa, and we still keep chasing that additional expenditure. We should be focusing on how do we grow the pot, how do we develop economic growth sort of trajectory that is a lot higher than we currently are experiencing, and then dealing with the structural issues to get people involved in the economy as we want.
And let's talk about growth for a bit. At the SONA, President Ramaphosa made a lot of announcements around, reforms and developing certain funds that would boost SMMEs just to boost growth. But we do need money for those projects. In terms of how do we fill this plug?
So the question both my colleagues Rosie and Frank have mentioned, where will the money come from, right? And I think the issue here is not to widen the spending, but to cleverly increase the pot. So there's two proposals I have here on this. One, the South African economic, particularly the financial sector, has what I call a sophisticated and very advanced institutional investment and also pension fund market. Most countries that are developed and advanced economies have looked at alternative ways outside of the fiscus and the public space to actually finance economic infrastructure expenditure. Where you have cash flows that you can collect on a long-term basis and ring fence those through SPVs, and particularly an asset class called infrastructure asset class, you have a potential here of raising revenue, generating long-term returns for pension funds. Make sure that you have a governance framework that is accountable and able to ensure separation of powers and proper governance framework. But in so much as raising capital for economic infrastructure, you do have the pension markets, you do have long-term asset managers that can actually look at some of these, particularly ports, you look at telecoms, you look at some of the road and logistic infrastructure, you look at what's happening, particularly at the entry points. There are several projects, if you look at the water, where you have tariffs and pay user fees, where fees are involved, you are able to structure some of these very unique asset and particularly vehicles and instruments in the financial instrument market, where you can actually generate and deliver some form of alternative finance to financing infrastructure investment. That's number one. I think the second aspect you've got to look at is how do you widen economic inclusion? Now, the president mentioned Transformation Fund as a vehicle. There's been a lot of talk about it being an extra tax, and so forth. How will it be managed? Who will manage this? The reality in South Africa, if you want to grow the economy, you have to widen the net. You have to include those who are historically disadvantaged. And those are Black primarily players in the SMME space who don't have access to capital. So again, you look at the financial instruments and the financial ecosystem, the existing ESD grants are not necessarily cohesive, coherent, and managed through one port of call. I think instead of looking at this as an additional tax, see this as an investment into the future growth path of South Africa. SMMEs in the main are one of the key growth drivers for growing economies. And if you don't finance capital through these entities, I think you will be hard pressed to actually grow and widen the net. So you've got to target those who haven't necessarily been able to access existing means because they don't have collateral, because they don't have the balance sheet, and they may not have the financial history. We've got to look at innovative ways to solve the problem of capital and also allocating it to those who are outside of the current net.
And let's talk about that further with you, Razia. Just, those financial or rather alternative financial instruments that we can use to, fill in the plug and just boost the economy.
So I think there's definitely a need for that, as was already mentioned. You can't look at an economy like South Africa, forget the history, not grasp the degree of inequality and how that is holding growth back for all time. But there's also another spending priority that was made equally clear in the SONA, and that is the infrastructure. Under a largely statist model, we have seen considerable shortcomings with infrastructure provision. The good news for South Africa is that reforms have been embraced. We're moving away from that. The hope is that there can be sustained improvement, but that is going to be costly. And while I have a lot of respect for what my fellow panelists have said, that there are no easy answers, there are lots of different ways to contribute to growth. One big picture way of driving this is just to make a sustained break with the past. Essentially, South Africa, having been locked in this space of very weak growth, needs to send a clear message that the future is going to be different, meaningfully different. It doesn't have the time, it doesn't have the luxury to proceed slowly with these reforms, and that's why more of a big bang approach that draws a line firmly under those years of weaker growth and ever escalating debt levels, that is absolutely the priority right now.
And I hear you in the sense of we do have to move a bit faster when it comes to those economic reforms. Frank, just your views around, how we can boost growth in the, I think it was the medium-term plan that was announced by the presidency, where they expect growth to hit 3% by 2029. But when you look at what the expectations from Treasury in the medium-term budget, they had revised growth lower for 2024 and are expecting growth to average around 1.8% in the next 3 years.
Yes, I think as Razia said quite eloquently, we need to do things differently if we want a different outcome here. I think we're going along the right direction with that. We know that the infrastructure initiative is underpinned by private sector money. It's just getting those private sector players into a sort of relationship that suits both parties and gets this economy moving once more. I think that is, for me, probably the core of what I'll be looking for in the speech. Or is there enough expenditure? We know traditionally less than 10% has gone to infrastructure spend, and that spending has not always been done in these sort of years subsequent to that budget. And I think that needs a lot of remediation. We've heard the minister speak largely about the importance of that infrastructure spend in the economy. And we know, I think if you live in this country, the state of a lot of our infrastructure, both urban as well as intra-urban, needs a lot of investment to get itself on the road. Within that, one can take initiatives to grow SMME sort of businesses. But I think the bottom line is government can't grow jobs. I remember last year we had the 7 billion fund in the presidency for creating jobs. If that was used differently, you could have given 7,000 medium-sized businesses R1 million funding. Surely that would have been more beneficial over the long term than a recurring 7 whatever it is billion in every budget to create a couple of jobs. That's the sort of thinking we have to be under here. Government must stand back, create this environment in which the private sector, with transformation funds, etc., can develop. And I think that's the only way we're going to get to a higher level of economic growth here.
Just before I let you go, I just want to look at the macro picture and some of the things that have been happening recently, also touching on perhaps spending allocation. And Tabi saying with all the developments and everything taking place, let's say in the DRC, where we've seen, some of our troops passing away over the past few weeks, do you expect to see perhaps a more allocation into the Defense Ministry, as some have said it's underfunded and under-resourced?
So recently, we know with the budget last year, around 280 billion was allocated to the peace and security cluster. We also know that Treasury does project annual increases, and I think it's around 4%, if I'm correct, with the peace and security. It is likely with the current austerity, we've seen a lot of the budget votes cut. We also know that the primary budget balance has been positive. What that means is that we are not spending more than we are collecting. We actually on par. The problem is the interest expenditure. That's why debt is a problem. So I think that when you look at the defense budget, it is likely that South Africa will see an increase more than what was projected in this budget in terms of the allocation. And it is expected, because of the pressure and the resources that are required for us to have a momentum in this regard, and the support that is required in the current DRC and also in East Africa, I would say, as a community. So I would expect an increase to the budget and the allocations in this respect. I think holistically, when you look at the macroeconomic framework, the South African story has got to have, I'd say, a real robust change. I think the GNU, to continue as is and to continue on the par it is on, where it's just business as usual, is not adequate. Mediocre growth, where we've seen lackluster, 1.8 is not where we are. Actually, we are sitting at 1.4, and it's likely to be revised downwards unless something substantive is done in terms of putting pressure points. Mining is contracting, industrialization isn't happening, we are deindustrializing, we're not able to have widening of employment opportunities, people's household consumption expenditure is actually declining. So all the growth points are actually looking downwards. Hopefully business confidence is looking up, but this is not sufficient to actually kickstart all the growth metrics. So we need to look at what must be done, and I think we're looking at National Treasury and the economic cluster to actually fast track some of these reforms, but also have inclusion as an underpinning necessary condition so that you can actually see growth happen. Without the majority in the growth picture, it's not going to happen. And so we've got to start widening the net and also be very robust and bold and courageous about what is required so that we can change the growth story.
Bold and courageous. And, Frank, the president really being bold and courageous when it comes to the NHI. With that in mind, do you then see more spending allocation going through to the health ministry?
I think inevitably the NHI appears to be a project that is backed by Treasury. I don't know the extent of it. We know it's a progressive initiative that's being rolled out over a number of years, and that I think gives the minister a little wiggle room in how much money to give towards the NHI. We know, however, that the health sector in general needs a lot of work to get it up to the standards that the people deserve.
Razia, sticking with that macroeconomic picture, yes, we do know that, our growth is really downbeat. But what we have seen post the national election is improved sentiment. This is what we were talking about in the first half of the panel. With that being said, I think we saw some of the ratings agency even turn positive on us in terms of our outlook. We also still have that grey list hanging over our head. Are you confident that we could possibly get off that list by the end of this year or within 2025?
Well, there's certainly been a sustained effort in terms of the FATF grey list, and South Africa has made clear that it's going to be trying to put in place all of the action required of it. My understanding is that there may still be an element of further steps that are needed, so let's wait and see. But the bigger question facing South Africa is we know that we've seen this upsurge in positivity and optimism, that maybe we're going to be seeing a slightly different tack to policy, we're going to be seeing a doubling down on reforms. There is an understanding amongst all parties for the need to see this growth acceleration that Ntabisang spoke about. And I can't agree more in terms of her sentiment. It has to be growth that is felt. It has to be growth that also addresses these longer term issues of inequality. The great news for South Africa, I think, is what we don't yet see in the growth data. We know that GDP is very backward looking. We know we've just had the release of December retail sales, where very curiously for December, we actually saw a deceleration month on month. But there's still an expectation that with low enough inflation, with a fairly stable rand for the moment, despite the multiple shocks and the very uncertain world, with the ability of South Africans to tap into some of their pension savings, and hopefully they'll keep on saving because that's a very important part of the longer term trajectory. But all of this does hint, at least, at a small cyclical upturn. The question for South Africa is, how do you make it more meaningful? How do you move from cyclical to structural? And how do you go beyond even 3% growth?
And talking about that 3% growth, also, hinging on reforms at SOEs, we are seeing changes at Eskom, but, really slow changes at Transnet. And Ntabisang, are these reforms moving fast enough?
The Transnet question. Transnet and Eskom are really sore points for the South African economy. We've lost, I'd say, about 2 to 4% in the 2-year period where we experienced load shedding. That is one of the constraints to not only attracting investment, but really just productivity. It slows down productivity, whether you're a business, whether you're a consumer, whether you're a big corporate. You cannot operate without power, and it costs you a lot more to operate using these alternative power bases, whether it's solar or installing all these other things. So the cost of doing business was increased. We shaved off our GDP quite considerably. It's quite exciting that we've had, save for one day, over 300 days of no load shedding. So it does look like Eskom is coming on par in terms of fixing the power regeneration at these power stations and ensuring that the energy availability factor is improved. A big up to the plan that was put in place. I think what is key to SOEs is governance, is the management team and having the right skills, the engineers where you need them, and making sure that the board keeps the executives to account. I think when you look at the Transnet roadmap that they put in place, they had a loan and also I think a facility from the BRICS Bank to assist in terms of the expansion plans that they have. And I think that in terms of dealing with the inefficiencies at the port in Durban, I think some of those were alleviated last year. But you don't want to have the country come to a standstill, Eskom and Transnet, before you fix the problems. So I think that you have to have forward-looking managers, executives, and a board that holds the executives to account, but also give them the necessary support from a financial perspective, because a lot of them, in terms of balance sheet, are over-indebted. And they do need the state to come on board, and we cannot run away from that for them to operate.
Frank,
so I think it's good to see them operating in this sense.
And let's talk about that support a bit further. Frank, Minister Enoch Godongwana has been practicing really tough love when it comes to these SOEs. Do you expect him to perhaps allocate a bit more when it comes to Transnet in particular, considering that they have been making progress with some of their turnaround efforts?
Yeah, it's a bit of a game of Russian roulette in a way, because we don't want the party at the opposite side of the desk to go away or die. We actually want them to improve their level of service and efficiency and productivity, as Ntabisang mentioned. And therefore, even though he has played this tough love games, he has played it where the infrastructure is not as vital. So SAA, whether you have an airline or not, doesn't really change the fortunes of a country. But whether you can move goods around by rail infrastructure into port infrastructure in order to sell them to overseas markets, that's a different cup of tea. And so I do think that perhaps there will be some slight deviation from the tough love when it comes to Transnet, but under probably serious set of conditions that he would put on their management.
I see you nodding there, Razia. Are you of the same opinion?
Well, the conditioning of any support is going to be important, and rating agencies have made this very clear in the past in terms of their treatment of certain policy steps that South Africa had undertaken. From Treasury, we've had the clear line that certain GNU partners are certainly not in favour of this continued bailout of state-owned enterprises. There has to be a better way. But at the same time, as Frank suggested, some of the state-owned enterprises are so critical to the functioning of South Africa's economy that in the very short run, you have very little choice other than to provide some degree of support. So I think a great deal of focus, a great deal of emphasis on the conditioning of that support, what reforms need to be seen, what actions need to be taken in return for the provision of state support.
It is just after 2:15. That budget was supposed to start at 2, but a last-minute cabinet meeting was called and seems to be running over. Seems like those GNU squabbles are rearing their head again. Still with me as we share analysis before the budget is Ntabiseng Moleko from the Stellenbosch Business School, as well as Frank Blackmore from KPMG and Razia Khan from Standard Chartered. Let's talk about those squabbles. It is said that last-minute cabinet meeting, there seems to be some pushback from certain members of the GNU when it comes to tax hike. Let's just talk about just the political ramifications of it all when it comes to increasing taxes in Ntabiseng.
So the first thing is you've got to look at where is the tax base coming from, and if there is a change in any of the three components. There's really four. So the first being corporate income tax, the second being your VAT, the third being your PAYE, which is your income tax from all those who are working. And I think then you have a small portion coming from excise duty and also your trade and your other tariffs. But because South Africa is part of your World Trade Organization and, duty-free access is a thing of the norm in South Africa. The biggest component of tax collection comes largely, obviously, from VAT, income tax, and then followed by your corporate. Now, if what we have discussed earlier, and we are to see an increase from the current VAT by 1 percentage point, what you have to carefully look at is the political economy. Who will this affect? How will this affect the current constituency, the different political grouping? I think the main thing is this. We know that VAT is going to affect your ordinary population, the working class, your constituencies. You're likely to see massive opposition from civil society, from your trade unions, and likelihood from the poor who are largely affected by this. We do know that there is what is called zero-rated goods that think about 23 goods. They may increase the number of goods that fit into this, but it doesn't go across the breadbasket enough. We know that the cost of living has gone up to 40% increase. What you used to pay 2 or 3 years ago for a basket of goods, even though inflation has been, I think now moderately kept in the 3 to 6% band. It's moderately expected around 4.5% in the outer years. What we have seen with the cost of living and the increased cost of living for the average South African is that everything has become very expensive. Food has gone up, fuel cost just to get to work. If you're taking a taxi to work or if you have a car that you're driving, the cost of fuel, including the depreciating value of the rand, but also the supply constraints that you're dealing with from the importing of fuel in South Africa, means that you're paying a hefty price in terms of just getting to the office. So what is left for you from your disposable income is actually far less. So I think that the effect of increasing revenue generation by trying to increase VAT is going to have a political ramification on the constituency. if the government goes this route, you are likely to then see the debate within the GNU on those who are defending the working class, who understand the ramification of this on the average South African and the ordinary South African. I think on the other hand, you have to look at what would happen if you increase the corporate income tax rate by a percentage point. It would be regressing from what you had seen 2 years ago. And again here, it would be seen as putting South Africa in a higher class of, again, tax bracket where we are seen as higher than the average, particularly in the first world economy, has been mentioned. So I think it's a very delicate situation. I don't quite know what the outcome will be. We'll hear from the Minister of Finance, but I think that either way, there will be trade-offs. There will be winners and losers. And I think that we have heard from one of the panelists that this may be the best time. But the issue is, with local government elections coming up in a year, there are serious political considerations that need to be made here.
A very delicate issue, as you put it, Ntabiseng. Now, there is talk that the budget may be cancelled today and take place on another day. We are seeing members of parliament walking into the venue, and there have been some chatter on that front. But let's take some more questions or more analysis from our guests before we go. We talked about the issue around tax and the issue around perhaps increasing VAT. Frank, on the other side of that, we also have government considering adding more items on the VAT exempt line. What are your what's your take on that in particular? Because we are dealing, of course, with a consumer, a South African, that is under pressure.
Well, I'm happy to answer your question, but I think your first statement probably took the majority of my attention, which is that the budget may be rescheduled, I think you said, based on the intensity of the debates that are taking place. So I think that's probably the headline. But so what we mustn't allow is for VAT to become basically an excise duty, where some products are taxed and others are not. VAT in this itself is a broad-based tax, and therefore, as Ntabiseng said, it's a very delicate subject, and to grow this basket of zero-rated goods over time without end would not achieve the aims. I think at the end of the day, we have to live with VAT at the level it is, even though now speculation is rife, that there's a lot of debating happening behind the scenes on where we're going to get more funding from. But I think we should look to other sources, moderation of the expenditure growth at this point, because I also don't see it happening. We know that recent studies have shown that between, as Ntabiseng said, transport and food in the lowest cohorts of the country, that absorbs 70+% of the domestic budgets. And therefore to raise that by raise 1 or 2 percentage points of VAT will directly impact that constituent, that cohort of the country, which I don't see happening.
So we have received confirmation that budget has been cancelled. Razia, just your initial reactions to that. I mean, really, those GNU squabbles, as I say, just rearing their head. What does this even mean for sentiment?
Postponed, not cancelled. The South African economy continues to operate. There is still a government. There will be a budget, but it looks now like it will be read in March. And just to update everyone on what has happened as these headlines come out, there were, of course, broad-based expectations at 2 o'clock South Africa time. The budget speech would start. We all know that there had been a last-minute cabinet meeting. Unfortunately, the context for this budget seems to be much more politicized. Markets are reacting adversely. The rand is losing a lot of its value. There's been a sharp move higher in dollar rand, all on the back of this concern about what does this mean for the government of national unity. One would have thought that there would be a fair amount of consensus building ahead of the budget. It turns out, with these last-minute cabinet meetings, with some political parties stating their opposition to potential measures, that isn't going to be the case. So what could have been a very market positive outcome. South Africa sending a clear message that it's going to be taking the necessary fiscal action to outline a different debt path going forward. Unfortunately, that now looks to be very much clouded by the speculation on what is really going on in the background. There's going to be a lot of debate about VAT. There was almost no expectation amongst analysts that this was even being considered as recently as a week ago. The press has been full of mention. This, in that respect, is one of the leakiest budgets that we've seen in recent memory. But now there's uncertainty about what is actually going to be agreed on, what is actually going to be announced, and everything is postponed to March.
Unfortunately, we have to leave it then. Thabiseng Moleko from the Stellenbosch Business School, Razia Khan from Standard Chartered, and Frank Blackmore from KPMG. Thanks so much for your time and insights.